We are going to start. There's still some people that are coming into the room. And I do hope that you all had a very pleasant evening in Brussels yesterday. At least the weather was okay in the evening. And we resume this last day of the annual conference with the last and third plenary session that we have entitled The Future of Economic Interdependence in the Mediterranean. But allow me to start by wholeheartedly thanking my colleagues at the EuroMeSCo Secretariat, to Emmanuel and to Jenny, to Anna, to Minerva and the rest of the colleagues for the outstanding work that they have been doing. I'm sure that there will be time for applauses and time for gratitude later on, but I wanted to stress this message. And as I said, this plenary session will be devoted to economic interdependence, and for some economists, economic interdependence is a good pattern because it sometimes helps to either avoid or mitigate potential political conflicts or the escalation of conflicts. We have seen it with the two most interdependent economies worldwide, the US and China, over the course of the last 10 to 15 years. But it is important to stress that dependence has to be reciprocal. Otherwise, there is no interdependence. And I remember that after the COVID-19 pandemic, some economies will start looking at how countries responded to or were exposed to shocks of supply and demand by looking into the linkages of trade in value-added data. And some of us did this exercise and conducted this exercise in the Mediterranean region. And these results show once more that the Mediterranean region accounted for very low or very weak integration dynamics. And therefore, this interdependence, or this economic interdependence, at least when we look at the data, was not clear at all. As you know, this comes in a situation where we have the northern shore of the Mediterranean area being probably the most integrated area worldwide, while the southern shore area being one of the least integrated areas. So that normally generates not only dynamics of dependence, but also dynamics of disintegration. So the first question we should probably ask ourselves is whether economic interdependence really exists in the Mediterranean area, and in what sectors it exists, or it can, of course, exist. Lately, on the other hand, we have seen how the war in Gaza is yet another shock to the southern Mediterranean area that accumulates to ongoing crises such as the COVID-19 pandemic, Russia's aggression into Ukraine, and the most evident consequences in the fields of food security, energy security, and the cost of living in the region. And some of our panelists will refer to that. Economic growth is expected to improve slightly in the course of 2024, but lower than the world's average due to the impact of the conflict in Gaza, especially in the neighboring countries, in Lebanon, in Jordan, and in Egypt. Inflation, on the other hand, continues to decline thanks to the tightening policy measures that have been put in place by most central banks in the region, but remains very problematic in Egypt and Lebanon, with rates above 50%. It is true that whereas the war in Ukraine had very tough effects on the region as a whole, the Gaza war is damaging much more Lebanon, Jordan, and Egypt as the neighboring economies. We see that with the tourism sector, the agricultural production in the first two countries, and with the aggravation of the foreign exchange shortages in Egypt as a consequence, as well as it was recalled yesterday, of the security situation in the Red Sea and the impact in the Suez Canal. Finally, there is a crucial issue that we would also like to address, which is the issue of the infrastructure that remains really critical in the area. The two major natural disasters events in Morocco and Libya last year have proved again how fragile public capital goods are in the region and how important it is to promote massive investment operation and plan in the region. So to that end, we intend to discuss a number of hot issues in the economic discipline, such as trade and investment and supply chains, and the famous nearshoring and friendshoring intentions, capital markets and debt crisis, energy infrastructure, connectivity with the two massive plans that are on the table, the EU Global Gateway, and more recently the IMEC, also Green Partnership, all as a corollary to answer the question, well, we have not reached regional integration in the Euro-Mediterranean area, but is it possible to advance in the near future or not? And well, I will, because yesterday some of the discussions that we held were rather pessimistic, I would say. Some of the conclusions were rather pessimistic. So one of the first requests that I'm going to ask my dear panelists is that we try to remain optimistic as much as we can and try to embrace a positive agenda. I know that this positive agenda in the Mediterranean has been around since Michael Kohler was director in NIR, so a long time ago, but that is one of my my requests. I mean, we should end this session with a little bit of flair of optimism for the region's future. And I know that this is a very difficult task, looking at what we have at the moment, but that's one of the requests that I'm going to ask my dear panelists. So I'm going to start by asking them. And I will go back to our old habits of starting by my far right. So I'm going to start by asking them to mention 3 economic or geo-economic dynamics that contribute to bring both shores of the Mediterranean closer. Okay? So be very brief, very precise, and I'm going to ask Hamza Medeb, who is the Director of Political Economy Program at Carnegie Middle East Center in Beirut, though he's originally from Tunis and working from Paris, if I'm not mistaken, to start with. So Hamza, the floor is yours.
Thank you. Sorry. So thank you. And am I supposed to have, brief answer or?
Brief answer, yes,
answer,
please.
Yeah. I mean, yeah.
For the first round.
For the first round,
you will have more time, yes.
I totally understand. Yeah, actually, there are 3 maybe key dynamics. The first one is trade. Trade is important, although, I mean, in this case, there is clearly an interdependence, actually, between Europe. Now we have to dig a bit more into this, the trade dynamics, to see that Europe is an important partner for the South Mediterranean countries, but the South Mediterranean countries are not, as important for Europe. I mean, only 5% of the EU external trade is with the South Mediterranean countries. This is, whereas, for example, if you take countries like Tunisia, Morocco, the North African countries, European countries are among the prominent trade partners. So here you have interdependence, but a huge asymmetry in a way. The second dynamic, we can elaborate, of course, later on this. The second dynamic is remittances. And here we are talking about an uncoordinated uncoordinated financial instruments or financial flows. And what is quite interesting is really the importance the growing importance of remittances between the two shores of the Mediterranean. And it reflects actually an important dynamic, which is the importance of migration over the previous years. Another aspect is the deterioration, in my sense, of the economic situation in many South Mediterranean countries. I mean, in Egypt, in Tunisia, in Lebanon for sure. And we are seeing the remittances ranging, actually the importance of these remittances ranging from 2% to 20% of the GDP, depending on countries. The third dynamic that I see quite really important is related also to the deterioration of the economic landscape and the economic situation in many countries, is financial support. And here, of course, I mean, we have the different types of financial support. I mean, whether the macro-financial assistant instruments or different variety of instruments are extremely important and becoming increasingly important for countries like Tunisia, actually to stabilize their extremely fragile economic and financial situation. I'll stop here and we'll be back on more details for sure.
Well, thank you, Hamza, for sticking very much to the time. So move to my center right now to Katarzyna Zilo, Kasia Zilo, as you want to, as you prefer to say it, who is the director of the MENA department at CASE in Poland. I often mention that the perspective of Eastern Europeans, albeit very different, of course, from the situation in the southern Mediterranean, is very important in our debate. So I actually thank your active engagement in our network. So Kasia, also very short, please.
Thank you, Roger. Right, I will be very brief. So for me, the three kind of main dynamics will be trade that Hamza already mentioned, and the interdependence, or like outside of energy cooperation, probably like dependence on the Southern Mediterranean, on the EU. The second one would be energy cooperation, so the growing needs of the EU in terms of energy, especially green energy, and the hopes related to cooperation with the Southern Mediterranean countries when it comes to that field. And the third would be investment, and that in turn is the hope of the Southern Mediterranean countries when it comes to cooperation with the EU, which has not materialized so much so far. Roger mentioned during his introduction nearshoring. It's been one of those keywords that we've been repeating indeed since COVID, like nearshoring. So moving production to the closer country, which has some competitive advantages, or friendshoring, which is pretty much the same, but then the country has to be friendly, like reliable for you. And frankly, when I was chatting to Roger yesterday, I was preparing for this panel, I continue to try to find actual examples of nearshoring of production to the EU. And I couldn't find any. I was desperate. I turned to ChatGPT and I asked, like, could you please give me an example? And he was like, certainly. And, like the whole list. None of them was correct. Like everything I could find, everything the AI could find was examples of either new initiatives, so just establishing plants, but that's not nearshoring, that's not moving a plant, or actually establishing, expanding what was previously created. But I couldn't find one single example of actual moving production from, in particular, Asian countries, when you think about it, into the southern neighborhood countries. I'll be happy to elaborate on that a little bit later, but I think this is something we should pay attention to. Like everyone is talking about potential for nearshoring, potential for friendshoring. Where do we stand at that? I'll stop for now.
Well, that's indeed a very good question that we will need to answer, and not only for nearshoring. There are other of these big EU plans that have not yet materialized, even though we have been talking about them for years now. Next, on my left now, Alia Mouvayet.
Always on the left.
Always on the left. Alia Mouvayet, who is the chief economist for the MENAP area, so that reaches up to Pakistan, in Jefferies, which is an investment bank. And I have to say that I'm very happy that Alia's here. I mean, she's not old, but she's an old hag in the sense that she's been in the region for a long time, because you were already negotiating the association agreement of the EU with Lebanon back in 2001. So indeed, in the beginnings of the Barcelona process, and even before the launch of the EMP. So Alia,
Yes.
3.
Thank you very much, Roger. I think I'm gonna try to talk about what I think are the 3 imperatives actually that push us towards greater interdependence, given what's happening. And these 3 imperatives are obviously the demographic imperative, and we've heard a lot about it yesterday. I mean, in terms of the EU's population that is aging, and that estimates range that could lose up to 57 or more million working age people by 2100, according to the most recent assessment by some EU institutions, and therefore its implication on the dependency ratio and on the economic and fiscal sustainability of some of the social and pension institutions, but I think more importantly on the productivity gains in the European economies. At the same time, you have an oversupply of unemployed, skilled and unskilled labor on the southern shore, and that naturally, with the trend we are seeing in terms of the divergence of per capita income, and which is a testimony to the fact that integration has not happened properly over the last 30 years, then certainly this demographic imperative and dynamics will imply further cooperation, not only on migration policy in the sense that Tariq mentioned yesterday, but also more broadly in terms of what trade, aid, and development agenda for the next phase of the EU partnership with the Southern Med. The second imperative, I think, is what we're seeing globally, and which is geoeconomic fragmentation. I think it's very clear that geoeconomic fragmentation is going to weigh very heavily on all small open economies, but also particularly on the EU, because it's one of the most actually integrated economies in the world. And there's a fantastic actually research piece by the IMF recently that shows the importance of basically higher restriction worldwide affecting cross-border trade and foreign direct investment over the last recent years, and what could that imply for loss of GDP, both in the EU, which is in itself will have negative spillover on the southern Mediterranean, and therefore the importance of broadening, I would say, trade and development partnership with countries that are nearby and where at least geopolitical risk is lesser, but that would be more North Africa rather than the Levant. The third is obviously climate change, and that is linked to what my colleague just mentioned now, which is the importance of energy interdependence and investing and making the business environment jointly conducive to exploiting the potential that southern Mediterranean countries offer in terms of potential investments in renewable to jointly face the imperative of climate change and its drastic impact on the macroeconomies, which, I mean, looking today at what's happening in Tunisia and Morocco, at least this year, that has been the main challenge for growth and social development in those two countries, at least.
Thank you, Alia. I'm sure we will have time to talk about these issues later on. And now let's move to the far left, to the last Jeremy Corbyn. Sorry. To our last speaker, who is Adel Hamaizia. Did I pronounce it correctly? No, okay. But we leave it here. We leave it here, and I will refer to as Adel, who is Managing Director at Highbridge Advisory Independent consultancy that advises governments in the region. Did I also say it wrong?
The government's bit? No.
Okay, well, let me finish, and then you correct me. But he is also a researcher at Oxford University. So, 3 factors, elements, please.
Thank you so
Adel.
much. Those that know me, I usually speak very fast, very long, very quick. But when I'm sick, I'll try and go with simplicity is the ultimate sophistication, and argue that Alia and my colleagues stole my notes. So just to sort of piggyback on them and sort of speak to alliterations, Alia just wrote, she mentioned development, demographics, and dependency. So within that framework, I'd sort of say that really what we're aiming for in the region, and this is sort of interdependence equilibria, is diversification, decarbonization, and digitalization. If you don't have that, those demographics will come over to you, and you'll have more brown people as your neighbors, whether they're Arab, Muslim, or from the Sahel. So that's one thing if we want to sort of go with the fear-mongering approach. In terms of the old MMMs of money markets mobility being migration, financial inclusion was mentioned, and finance, the gap is significant and massive. We can get to sort of the Chinese undersupply of loans in recent years, $200 billion odd now. Hamza referred to remittances and diaspora as a common denominator in the region. Where I try to sort of differ, energy cooperation, obviously hydrogen, repurposing, Germany, Algeria, flaring, subsidy reform, 50 BCM and 30 BCM to Italy, and exchanging trading places with Russia. There's a lot of that, and there's a lot of Russian dolls that we can come out with. But on the energy security piece, it's clear, and it's sort of discount rate, short-term versus long-term is a game that governments will have to play and negotiate from Doha to Algiers. And then on the geoeconomic piece, I think this point on red or blue supply chains, and whether you can actually have purple ones, is I think going to be one of the deciding issues of our time. And there will be a lot of policy borrowing and echoes from the likes of the GCC and BRICS. Algeria we can come to on BRICS shortly, in Egypt. So for me, it's really sort of geoeconomics, energy, and that people piece. And just to sort of add something different, I just add that I think we've got diminishing returns on cronyism in the region. So if there's a lack of contestability and we underwrite non-private sectors or private sectors that aren't particularly private, of course the day after will lead to, you know, I don't want to say failed states, but states that, you know, do not deliver. Populations continue to grow. Mubarak from 81 to 2011, 45 to 90 million. Algeria from its bread rights to now 16 to 32, the Iraq. And I can go on and on in terms of the doubling of populations. So that demographic dividend or curse, depending on how we want to frame it, is going to be one of the deciding issues of our time. Ibn Khaldun, who was a Tunisian jurist and philosopher, famously said that strong merchants shall eventually surpass their rulers. What does that mean? SOEs dictate, finance goes to the wrong places, misallocation of resources, and a genuinely private sector would undermine the status quo. So until we find a way to share the pie and grow the pie rather than take the pie, we're going to have a lot of challenges on our hands, on both shores of the Mediterranean, for sure.
Thank you, Adele. But I stick to the idea that we have to remain optimistic. Mm-hmm. Okay? Optimistic. Okay. We have a long shopping list now. Lots of issues have been put on the table, and now we will start the round again with a little bit more of in-depth analysis. So I'll start with Hamza again, and I will ask you specifically about the issues that you highlighted. So how can we strengthen the existing economic links in terms of trade, remittances, in terms of financial system, assistance for macroeconomic stability, well, with the aim, of course, to mitigate the crises, the existing crises that are not, wouldn't say general or cross-cutting in the region, but that specifically hit some of the countries in the region.
Yeah. Well, I think when it comes to trade, many of you can remember, and I think Ali and Roger mentioned this briefly. I mean, the 90s, mid-90s, and the years 2000 were the years of the the trade agreements at that time. And Tunisia was the first country to sign, and then Morocco, Egypt, Lebanon, etc. The hope at that time, these were, I mean, long time before the Arab Springs and before I mean, many dramatic developments in the region. The hopes at that time is that trade and investment will be really tools to achieve integration between the two shores of the Mediterranean, that creating a sort of a shared prosperity. Really, I mean, this was a big an important, actually, objective of the trade agreements, etc. The result, I mean, 2 decades is after 2 decades, it's, I mean, hopes were dashed in a way, and clearly what we saw is that, I mean, as I mentioned, I mean, trade between the two shores is, remains quite, I mean, completely, I mean, asymmetric in a way. That's something maybe to stress on. But the other thing is that the fact that this instrument trade was mentioned, or was designed, sorry, to allow sort of an upgrade of the economies of the countries, the South Mediterranean countries. I mean, this objective was not fulfilled in a way. And this is, in Tunisia and Egypt at that time, the discussion was to upgrade the economies, to modernize the economies, to make them really more receptive to investment, etc. And it's clear that the end result, unfortunately, due to many, to mismanagement, to underperformance, to problem of governance, etc., that these countries failed actually to strengthen their integration in the value chains, to upgrade their economies from the low-cost sectors to higher value-added sectors. And this is unfortunately, I think, led to sort of blockage in the discussions with the deep and comprehensive free trade agreements after the Arab uprisings, if you remember, actually in 2013 and 15 with Tunisia, Egypt, and Jordan. So yeah, I mean, the trade is important, but it was really an unfinished dynamic in a way. The hopes that trade can secure an integration between and to allow investment and to boost investment and to allow better integration between the two shores was not achieved. If we talk about investment quickly in relation to trade, it's clear that I mean, in the southern Mediterranean countries, they hope to attract actually investments. The end result is that the southern Mediterranean country attract only 3% of European investments. So European investments, they go elsewhere. They go to Eastern European countries, to Asia, to America, to North America and Latin America. And this is quite interesting to notice. I mean, the neighborhood in terms of trade and investment integration is not integrated, and this is an unstable neighborhood, while the economic tools are lacking. Now, I'm not saying that the European investors are to blame. This is a region also that is really fragmented, as it was mentioned. I mean, this is a region, the least integrated region in the world. So the potential actually to attract investment in this region is also weak. But also, I would say that there is a lot to do, and to speak about maybe positive agenda, Roger, I think there is a lot to do on investments. If you take China or Japan or even the US, 20% of investments of these countries go to their neighborhood. We are talking about 20%, and this allowed, in the case of China and Asia, for example, China/Japan and Asia, to almost to implement a sort of the flying geese, paradigm, or the flying geese theory. I mean, the idea that to have a leading nation, that the leading goes, and then that there is a sort of trickle-down transfer of technology, transfer of economic development, etc., that will benefit to the flock of countries, etc. This was not that are following actually the dynamic. This was not, unfortunately, the case in the Euro-Mediterranean relations. So I think in terms of investment, and for sure Katarina will talk about this in more details, but there is something to do, especially in the moment of fragmentation of the global economy, of reshuffling or reorganization of the value chains or the supply chains, etc. How is there space, a room for a shared pact, allowing to reorganize or to re-establish investments in the neighborhood through these dynamics of nearshoring, friendshoring, etc. I think there is maybe for sure there something to do. It's a gap that needs to be. We need to think collectively on this. On remittances, I think this is an extremely important dynamic. But here again, the challenge has always been how to channel these remittances towards productive, actually, investment. And here, many countries, they have been active on this. I'm thinking of Morocco, for example, with the deployment of Moroccan banks in Europe and to attract the remittances and the transfer of the Moroccan diaspora. This is not the case of Tunisia or Egypt, for example. And this will remain a challenge in a way, how to really make sure that the remittances will be channeled to productive sectors. The only problem I see with these, not the only, but one of the major problems I see with remittances is that increasingly, I think, in a context of deterioration of the economic landscapes in many countries in the southern Mediterranean region, I see like they're becoming a sort of friend. In Tunisia or Egypt, I mean, this is there is no need to move or to be active but people the diaspora will send its money in a way, and it will help fill these huge and growing financial gaps in these countries. On financial support and on the financial relations, I think increasingly we have seen sort of linking the financial support with a sort of transactional agenda related to migration, to stability, etc. And in my sense, maybe to articulate also with what was mentioned by colleagues on the climate change, on the imperatives of transition, there is for sure a way maybe to broaden the scope and to think of a new deal, a new pact, a stabilizing pact for the southern Mediterranean that articulates many imperatives. I mean, the energy, of course, the climate change, but also the need to stabilize many countries. I mean, I'm thinking of Tunisia, of Jordan, of Lebanon, relatively of Egypt, although Egypt seems to be secured its for a while now its stability through the recent bailouts. But this, I mean, we need to think of these financial instruments and to into and to think of them into broader, in a way, pact that would allow the stabilization of the Southern Mediterranean countries, or the weakest Southern Mediterranean countries, and boost actually the positive or cooperation agenda on shared and common interest and common challenges, especially in terms of investment and of energy and on renewable. And promotion of renewable energies, etc. I'll stop here. Thank you.
Thank you, Hamza. Let us now go more in depth with the policies from the EU side on issues such as trade and all what has been in place to promote this nearshoring, friendshoring, and also try to do some prospective or launch some prospective ideas here. So, Kazia, how do you see the situation and how to improve it from these parameters?
Right. Well, I was not around in a research and policy world when the association agreements were negotiated, but I was there when they were evaluated. So I will take that as my starting point, the ex post evaluations of the trade agreements. And because that was a moment when the EU, like for real, started the process of trying to figure out what's wrong with those deals, what is not really working, and how to go forward. And that was very closely connected to the fact that the deep, comprehensive free trade agreements, which were supposed to be like kind of the next step in the trade integration, never really materialized so far, even though they were signed with the Eastern Partnership countries. So the conversation from the EU side regarding like why we as the EU have not managed to sign them kind of really boiled down to understanding that there's no appetite in the southern neighborhood countries to sign them. There's the issues like very politicized. The authorities don't seem to want to sign those agreements. Civil society doesn't want to sign those agreements. Private sector doesn't want to sign those agreements. And why? It's because they are very much seen as reflecting the priorities of Brussels, not of the priorities of the southern Mediterranean countries. They're not flexible enough. They are not tailor-made for individual countries. There are fears that in terms of the economic impact, they will kind of pressure more the already troubled economies in terms of the food and safety regulations, which are quite stringent in the EU, in terms of bigger competition for the SMEs in the southern Mediterranean countries, in particular in the agricultural business. So adjusting to like all additional level of adjustment to the EU regulations, the cost of it, any disturbances to the job market because of problems for SMEs when it comes to the competition with the EU businesses, especially in the agricultural sector, like I said, because they are subsidized in the EU. Although, of course, EU farmers think, you know, this is like not kind of fair competition from the side of the southern Mediterranean countries. Then there is this kind of ongoing conversation about the threat to national security in terms of if you sign the DCFTAs, you have to align with a lot of EU legislation. So this is seen as an imposition of the foreign laws on the laws in the countries. And whereas for the Eastern Partnership countries, it makes sense. If they want to join EU anyways, they would have to do it at some point. But Southern Mediterranean countries, like, they don't have this perspective, so why go in this direction? And then, of course, there is an issue of the DCFTAs promoting free movement of goods, services, but not people. And that's obviously a major issue for the partners in the southern Mediterranean. So, like granting temporary freedom of movement for business purposes for the Moroccan government, for the Tunisian government, this was like a sine qua non for the furthering negotiations on the DCFTAs. So, where do we stand now? And I will move to where I think we will be going forward. I'll try to be optimistic. I'm not, but I will try. So where we stand now is that the negotiations with Morocco and Tunisia have been stalled completely. Negotiations with Egypt and Jordan haven't even really started yet. And they probably won't. When you look at the partnership priorities that's been signed between the EU and both countries during the previous programming period with Egypt and Jordan, there was a reference to DCFTAs in both of those partnership priorities. In the 2021-2027 priorities, there's no mention of DCFTAs at all. It's like even the EU gave up on the idea. It's not even there. Now, recently, Egypt and EU agreed to elevate the relationship to the level of strategic and comprehensive partnership. And there's a reference to trade in there. But this document talks about modernization and review of the association agreement on issues of trade and investment relations to better adapt them to today's challenges. So that could mean anything and everything, right? Like the perspective to modernize existing agreements, modernize how, towards which direction. Even more ambiguous is the perspective of revival of the existing FTAs agreement. What does it supposed to mean? Like, how do you revive them without changing the agreements that are so old with provisions that really don't fit into today's reality? There's been some talk, and this is where I see perhaps the future going, and there's been some talk about potential to sign individual agreements just on the investment issues. And there were, I don't know who said that, but during one of the conferences, and I think Roger, you were that as well, someone said, like, I don't see the glass fully empty, I don't see the glass fully like half full, but at least we have a glass. And I think like that's the way we look at it. At least we have a glass, so we have this relationship. And perhaps moving forward, just looking at the investment issue would help to take a step forward. This is something that's important both for the EU and the Southern Mediterranean countries. This is somewhere where the EU could use this nearshoring, friendshoring discourse and put it actually in place, in reality. This is where we could negotiate some actual step-by-step changes to the business environment in the Southern Mediterranean countries with like actual promises, you know, like this happens and then, I don't know, you give some tax breaks, limited time, of course, you can't do it forever, or you try to modernize this or that regulation, and this will help to attract this and that agreement. I think especially in Morocco, this is slowly happening when you look to a limited extent at Tangier, for instance. This is one place where some investment is happening. So I'm not sure to what extent there is actual optimism regarding this kind of future of relationship from the EU side, and to what extent there's an appetite among the Southern Mediterranean countries. Perhaps my colleagues will be able to tell more about it. But in my view, this is more realistic, focusing just perhaps on an investment agreement than trying to modernize the existing AAs. Now, two more things I wanted to say regarding the EU, because you asked me to talk from the EU perspective. So for the EU, trade policy is, of course, foreign policy tool. And I did mention that the Eastern Partnership countries did sign the DCFTAs. And for them, this is part of the process of becoming EU members. This is something I've been saying recently when I travel around and talk, is that what we, I think, need to bear in mind is that, in general, the focus on the foreign policy for the EU is on the enlargement. And there will be even less focus on the Southern Mediterranean countries. The enlargement, if it happens, whether it's like a big bang, probably not. But stage enlargement, this is something that really is going to consume a lot of resources and a lot of energy in the EU institutions. So there will be even less resources to be dedicated to the Southern neighborhood. And the second point I wanted to make, which is related, but perhaps a little bit less so, is the extent to which I think the EU gave up on trade as a foreign policy tool. It was supposed to be a foreign policy tool. But when you look at the situation over the past years, really, it hasn't been happening. When you look at how the trade agreements so far been not utilized really to push for human rights, to push for labor rights, even though there are provisions within the AAs that say so. This has been disappointing, but the new level of disappointment is how the foreign policy, trade policy has not been used as a foreign policy tool to exert pressure on Israel right now. And again, this is something I already said before, even during a panel with Roger, but it's not a completely out of the blue idea, right? There was UN Special Rapporteur who advised to cut economic ties with Israel. I'm not saying this is possible. I'm not even saying it's possible to perhaps impose strict economic sanctions, but it is possible to withdraw some economic privileges that Israel does have in trade relationship with EU through the association agreement. There is Article 2 of the AAs that clearly says there's an obligation on all parties to observe human rights. So there is actually a law that would allow the EU to utilize AAs as a tool to exert pressure. I know it's not going to happen. All I'm saying is it's not in agreement with Israel. Really? Okay, then I stand correct. Well, that explains a lot. Because it is in all the AAs with Morocco, with Tunisia, with Algeria, with Egypt, with Jordan. Well, then I rest my case and...
Well, in any case, there is a question raised by Spain and Ireland, if I'm not mistaken.
Well, there was, yes.
On this matter.
Yeah, there was. It was some member states did raise this issue. Well, I'll stop here then.
Okay, well, thank you very much, Kazia. Before we move to Alia, I just wanted to ask you a very, very precise question, because you spoke about your search in ChatGPT, and there was a long list of nearshoring that nobody, my understanding is that they already existed before 2020. But the question here is, why do you think that nearshoring is not actually happening? Is it because of the climate, the business climate is not favorable, and countries have not undertaken the reforms, with some exceptions, notably Morocco, as you rightly mentioned, but they have not undertaken the reforms that they promised to, or because there is resistant reluctance from the European side, or not enough support from public institutions on the European side?
I think it's a combination of all of that, but you need to remember that, like, European companies, unlike Chinese companies, could not really be told what to do by the governments. So they really need to see that there's an advantage for them to move production to another country. And what happens is that a lot of times they think in terms of price, and countries, the labor costs in the southern neighborhood countries are not as low as in Asia, for instance. So what happened before is actually, for instance, with textiles industry, it was moved from southern neighborhood to Asia. So that was it was not nearshoring, it was faraway shoring from southern neighborhood to Asia, because it was cheaper. It was simply cheaper. So now if you want to compete with that, you need to have other competitive advantages. And what doesn't exist is like a good business climate. Because rule of law is not really followed everywhere. A company is not sure that if there's any kind of misunderstanding with a local supplier or someone, if they go to court, there will be a fair hearing, and it's going to take shorter than 20 times to resolve it. So there's a lot of those issues that are very purely technical. It's not about, for the companies, it's not about, geopolitics. It's not about thinking in terms of, we don't want to deal with China. It's really about money. It's about business. So it boils down to the purely economic and technical things, like the cost of labor, the business climate, and so on.
Thank you, Kaisa. Yes, now let's turn left. Alia, can you please try to think from the general economic conditions that we have that are not in general, very positive in the region, how can we enhance regional integration? What are the key areas in which we can actually? I mean, I know that this question has been asked in the last 20 years, maybe thousands of times. But I want to hear your perspective on this one, please.
Sure. I mean, first of all, I think it is very important that we do the proper diagnostic of what's the current state of the economies in the region. And from my perspective, I think the southern Mediterranean is a region which is moving at multiple speeds, and I think we can't talk, as much as we have always this refusal of the GCC countries to put themselves with the rest of the Arab fold. I think even if we go to a sub-region like the South Med, there are great divergences. So you have obviously now with whatever the disaster in Gaza. I mean, you have more conflict and conflict-affected countries, completely failed state, which needs complete rebuilding between, of course, Palestinian territories, Syria, and Yemen. But then you have the stars, and there's maybe only one star in my view, which is Morocco, and which has a path on its own, and which has actually, I think, managed to take full advantage of the kind of instruments and dynamics that the association agreement were providing. And then you have what I call the distressed countries, distressed for different reasons, right? Like Lebanon, because of its own very weak and poor governance and sort of the mafia militia thing. The other thing is Egypt and Jordan now with the impact also of the war, of course, also in Lebanon, are severely affected by external shock. And then Tunisia, which is a self-inflicted domestic policy choices. So from that perspective, it is very hard for me to see that it would be acceptable for the EU to have a one-size-fits-all approach. I mean, those particular countries are very different in terms of where they are in the nature of their challenges that they are facing in the short to medium term, in their own aspirations, I think, for what they want for their economies, and of course in their own domestic political dynamics. So that's a first point. The second point is that growth in general in the region is facing different and multiple constraints. And I think maybe as we think about a regional economic interdependence, we have to understand very well what are these constraints to growth? Because eventually, if there's no growth, then there's no jobs, then migration becomes even more problematic. If there's no growth, then the debt sustainability and fiscal problems that many of these countries are grappling with will get even worse. And as my colleague said here, the EU is clearly going to be absorbed with Ukraine and a war, but also with other aspirations for future enlargement. So South Med is falling off its in terms of priorities. So the financing part is very good. So we need to look at what are these constraints to growth in the region and see how we can work with these governments in order to address these constraints. In my view, these are at least three important ones. First is the governance issues. And if you look at any single diagnostic from the World Bank for any countries, weak governance, whether it is unachieved judicial reform, or whether it is corruption and state capture, like in Lebanon, or whether it is basically a limited participation in the political process. The governance remains at the core of the constraint to growth in the region. The second is the financing constraints. I mean, you can imagine what would Egypt have been today without the large financing package of 57 billion that was just put forward over the last few weeks. We would have had a major problem to deal with in South Mediterranean. And these financing constraints are here to stay in this global environment of relatively sort of not a stalemate in growth and very slow recovery of developed economies, let alone, of course, what is dragging the European economy in terms of its geopolitical challenges. So the financing constraint is there, and here, and I will come back, we need to think about how do we bring in, how the EU and those countries can bring in the GCC differently to think about a strategic cooperation framework in the South Med, because we have the impression today that the EU is doing its own agenda, the GCC have a very increasingly transactional, as Adel said, but there is very little actually dialogue. There is a strategic dialogue between the EU and the GCC, but a strategic dialogue between these two actors about the future of the South Med, in my view, is critical, given the fact that, unfortunately, or unfortunately, it depends where you stand, that the EU's leverage in those countries is becoming increasingly weaker, whereas the GCC countries' leverage, because of their financing power and financial power, is actually becoming more important. So the financing constraint and how do we work together to alleviate it is critical. And the third basic constraint on the growth is the issue of the role of the state in many of these economies. Now, it's very interesting that what Morocco is doing today is trying to say, okay, I've done this sort of huge public investment and I've built quite a robust economy in terms of, but now my problem is how do I change the economic model from a public-led investment model towards a private-led investment model. And I think this is the kind of frameworks we need to instill, that it is ownership, there is an ownership for this agenda, and not really an IMF-led or imposed sort of external agenda like what we are seeing in Egypt, and we see still a very limited commitment to moving towards basically giving the private sector the role that is required. I mean, this is becoming for me, and that talks to why we don't have nearshoring and friendshoring. I mean, like, give me a space for the private sector to move in these countries. Get me a proper regulatory framework for competition, for independent regulators in the key utilities sectors. Here, all this, a proper commercial, judicial justice system, etc., etc. So all these business environment pillars and structure reforms that are necessary for private sector-led growth, we need to put an emphasis on them. And this is why I think moving forward, besides, I mean, the fact that we need to review the association agreements and tailor it to these new realities and to the demands, I would think that bringing the private sector into this discussion is very important. I think these discussions about the future of the FTAs has, at least from my experience in the past, even though in Lebanon we brought the private sector in, but now we are in a different situation. Still, these exercises are very much state-led, right? I mean, you negotiate trade agreements, and then there is very little voice for the private sector in them. So clearly, you need to look again at the services and rules of establishment, the agricultural sector, the non-tariff measures, because when we think why the association agreements actually have not delivered in terms of integration, partly it is because while we reduce tariff, the equivalent, basically, tariff for, or ad valorem tariff, average tariffs of equivalent of NTMs remains very high. And also what is even worse for the South Mediterranean is the fact that they have seen erosion in terms of their relative market access vis-à-vis other countries, because the EU has liberalized versus tier countries, and the Southern Med finds itself as a disadvantage because whatever it has negotiated in terms of tariff reduction is now actually eroded, and they have to compete within the European market with others who have better access. So this is why we will need to look again at these FTA, and this is why you need to understand why the DCFTAs have not gotten traction. But in this, in parallel, I think it's important to accelerate and deepen the economic dialogues in these countries. I mean, it's very interesting what is happening now in Tunisia. I think given the refusal of having an IMF program and by the I'm keeping an eye by the president, but I think the EU can play a role in those countries where it is still perceived to be an important partner, and that it can basically bring the other multilateral organization towards pushing towards a solution and avoiding a crisis. So having deeper economic dialogue is extremely important. And finally, as I mentioned, the GCC is essential. I mean, this has to be part in the next phase. I mean, look at Egypt. Okay, the EU is putting 7.4 billion, but it is being dwarfed by the EU funding, and we don't even know actually what is the UAE funding, which is not clear in terms of what kind of reform agenda it is linked to. So having a strategic dialogue with the GCC about these particular crises and strategic countries would be essential in the next phase, in parallel to a more longer-term agenda of putting back the association agreements on track while tailoring them to the realities of these countries. Thank you.
Thank you, Alia, and thanks for mentioning the issue of the triangulation.
Yeah,
EU,
that's essential,
EU,
to be
GCC,
honest, now at this stage.
Southern Med, because it's true that the EU, probably since the launch of the Mediterranean agenda, has intensified the needs to establish this triangulation with the Gulf, but little has happened, whereas bilateral dialogue continues and is even enhanced with the GCC. And the UFM, of course, is normally invited, but there is no real triangulation. And it's indeed an important element.
And this will help also align the GCC agenda, because all the GCC countries don't have the same agenda in the region.
Exactly.
So that's another problem, but I'm not going to go there.
Exactly. But that serves as a purpose for our last intervention today from Adel, because he's gonna speak on how extra-regional actors, namely, well, we said GCC, but also the BRICS, and especially now that the BRICS have enlarged and are including some GCC members, but how interdependence is also being built between them and the Southern Med region.
Thanks, Roger. I just wanted to come back maybe briefly, since nearshoring was mentioned. So if we're talking about this sort of globalization or deglobalization or nearshoring, friendshoring, whatever term you want to use, in our day job, actually, our primary work is taking companies into the Middle East and North Africa on the due diligence point, and we've started entering the deal space. So two things. There is a lot going on. We've seen a lot of textiles moving to places like Aqaba, for example, where the calculation is really around shipping, FTAs, and then of course the labor force. If you take Egypt, you have 40 million English speakers. Obviously, there's cost arbitrage. One of the challenges recently with the nearshoring around services was really repatriation of capital in Egypt. So that was the big challenge. So we had one issue where we had a telco who had done very well in the GCC. They had lost in 2 North African states. They'd invested in West Africa and in East Africa. For those that follow, you'd know which company I'm talking about. And they wanted to know, what can we do to sort of minimize our losses? And one of them was to move back office from that GCC state to Egypt, and to try and benefit from that cheaper labor. So you've got a little bit of that. One thing you're seeing in Mexico, if we're talking about maquiladoras a la Maghreb and maquiladoras in the US, you have almost... if we're moving just in time to just in case, you have Chinese via disguise, i.e. Chinese investing in Suez, for example, in order to be closer to market, in order to get around the very friendshoring. So they're almost gaming the friendshoring themselves to be closer to market. So you've got a couple of these dynamics. Now in terms of BRICS, I was in the US last week, and we had a conversation with National Security Advisor and National Economic Advisor, Vice Chair of the Fed, and some of these issues came up. When it comes to depth, the fact that Algeria did not join BRICS, this should have been high on the agenda for Brussels in terms of maybe this is an opportunity. Unfortunately, there is clearly a lack of depth or foresight or capacity at the moment. To come back to the BRICS point, when Lord O'Neill developed the investment prospectus in 2001 for Goldman Sachs, the idea was supporting investors to deploy capital in high growth and large markets, right? If you fast forward, and of course that acronym worked out, and you added an S, and it all worked out fine and dandy. Couple of decades later, when we're talking about BRICS Plus or expansion, etc., the metrics are very different. It's not about high growth and high markets. It's basically you have strugglers, sanctioned, and sailors. Sanctioned Iran, strugglers Egypt, Ethiopia, etc., Argentina, and then you have the sailors in Saudi Arabia and UAE, though Saudi Arabia hasn't apparently fully ratified, we hear. So this is really about de-dollarization. This is the term we hear. We know it's overstated. We know it takes very long to move away. We know it took 20 years to just remove, as a sort of FX reserve currency, it took 20 years to reduce global FX reserves in dollars by 13%. So it's a long road, but what you are going to see now is possibly more barter trade with some of these states. And if that happens with the GCC, and you have OPEC Plus and BRICS Plus in the same talking shop or same fora, I think that might change things. There is the argument that India, and the larger the entity, the less functional it is. Don't know if you've heard that before. That's one thing that we continue to hear. But in terms of the imperative for the GCC, dollar pegs are there, so I'll continue on, which will have implications for North Africa. On the triangular relationships, which Alia alluded to, there have been some great examples, and of course, mostly in the renewable space. In fact, companies like Aqua Power in Saudi Arabia have done better outside of their borders than inside their borders when it comes to kilowatt hour, etc. And Ben Ban is an example where we've seen blended finance with European partners. Warzazat, of course, with the CSP. And I think there's going to be more and more of that. Possibly in critical national infrastructure. The big question is what happens with the likes of US-Saudi defense pacts? What does that mean for the Huaweiization of the region? And then how does that lead to developments, divergence, disaggregation, decoupling, de-risking with the likes of the GCC in North Africa? Just a couple of points on finance, which Hamza had mentioned. I think there needs to be a little bit more innovation. So we're reaching the end of the 30 years of Barcelona. In August, it'll be 30 years of the non-Maghreb. So since Algeria and Morocco had its border closure since the bomb in Marrakesh in August '94. So like what kind of innovative products, services, approaches are we going to see from the EU? There've been, talking about unlocking financing, there have been examples of diaspora bonds, for example, which failed mostly in sub-Saharan Africa. They did well with India and Israel, where there were institutions or there was SEC regulation. So, you know, is the EU thinking along these things? We speak of sort of non-objective risk premiums, where we've had lost billions in financing. I think somebody mentioned the European Fund for Strategic Investments yesterday. You know, the numbers are very small, but the ideas are quite good when you actually go on the European websites and you see SME integration of local suppliers, a lot of stuff around green energy and trade facilitation and trade enablement. So, you know, what else can go on there? On the technical piece, coming back to energy, two areas which are very dear to me. I always look at things from a winners and losers political economy approach. So with subsidies, very scary stuff. If you are going to an election in Algeria or Tunisia, you wouldn't want to touch that with a barge pole unless under duress. But if you take, say, flaring, for example, just flaring, which is just a technical issue, where there's a denial issue, you look up, satellites tell us how bad the problem is, you're talking about freeing up possibly around 18 BCM, which is technology and finance, which is practically almost all of what Italy takes from Algeria today, around 20 BCM. So there are some low-hanging fruits. So I think it's also good to look at things through the transactional, the long-term, the short, the midterm, and the sort of low-hanging fruits versus the big picture kind of the sort of big picture ambitious. We didn't touch on things like the CBAM, which I think is something that is going to come up more and more with a lot of the association agreement discussions. And it should be viewed through the prism of win-win and supporting the cross-border adjustment mechanism, which was going to, by 2026, impose tariffs on things like downstream fertilizers. Morocco happens to be one of the largest fertilizer producers on the planet, Algeria with steel, and what we call economic diversification light in terms of downstream diversification around energy-intensive industries. So what is that going to mean? Is there standard setting that the EU is trying to support some of these partners? What happens to an association agreement? When I sit in the GCC, and I've sat with senior officials in the GCC who say, we don't really want that agreement of the GCC. They'll come and dismantle all of our SOEs and our family businesses. We can't compete with them. And you're going to get the same with North Africa. So what is the thinking? Where is the support? Where is the technical expertise? Where is the technical transfer? Of course, Chinese and the GCC have a competitive advantage, which is SOEs. They can go get it done. Bar for Airbus, if you go on the top 20 companies of the EU, all of them are national flag carriers. Only Airbus is multi. So, of course, that comes with its own challenges. I won't dwell too much, but I think there definitely needs to be more thinking on this tech piece and where AI, future of work is going, seasonal labor, which comes back to visa. And just to sort of leave you with a slightly negative point, since you told us to be optimistic, is really, I was in one of the foreign ministries in the GCC recently, and I asked them vis-a-vis Gaza and etc. Where you see things in terms of US, China, Europe, US, and the gentleman said to me, solid liquid gas.
So China is a solid, the US is the liquid.
No, EU is liquid.
And the gas is...
I was also told if the idea of any German, Frenchman, Italian, Belgian, and I can go through the 27, probably 23 maybe, were to come into my offices and even mutter the word حقوق الإنسان, droit d'homme, human rights, they will be laughed out of the door. Laughed out of the door. This is a G20 state, so you know which one I'm talking about. So I think I think you had a session yesterday which I missed on narrative. I think the role of institution building and incentives, a la the Chinese comprehensive strategic partnerships, that has to be, I think, imagined a little bit better, and the framing has to move from patron to peer and partner, rather than anything else. But sorry, I'm rambling, but we can come back to some points maybe in the break.
Excellent. Well, excellent to the four speakers, and I already see hands raising because, of course, the shopping menu has expanded, and I want to move straight to give the voice to the audience so that we can actually take most of the time. So I see you first, and then we'll move. So we'll take, because there are many floors here. So we'll do groups of by three. So yes, go ahead.
Thank you, Roger. Thank you. Thanks for the interesting presentations. There was something mentioned during Katarina's presentation about the association agreement between the EU and Israel. I'm a bit confused of the exchange that has happened, and just to get it clear. I just checked the official journal of the European Communities, dated 21st June 2000, and in Article 2 of the Association Agreement, it says, relations between the parties, the EU and Israel, as well as all the provisions of the agreement itself, shall be based on respect for human rights and democratic principles, which guides their internal and international policy and constitutes an essential element of this agreement. So I think this is like other association agreements with other countries, not only with Israel. Can we clarify this point, please?
If I can jump in, I was just going to say that I also just double checked, and yes, you're absolutely right. It's like the other agreement. So there is, and Spain and Ireland, in fact, brought this, and it gathered some support in the European Parliament as well.
Michael, you were actually the second one to raise your hand. Would you like to? to take the floor.
No, but there's this generic clause, yes, but and actually also the European Parliament, I think, at some point asked for a freeze of the agreement, but that was many, many years ago. So nothing to do with the present crisis. But there has not been any kind of specific declaration or so, as you have in other agreements, that spells out how to interpret that, for example. How to interpret, for example, a substantive violation of the agreement. So, but that's not the central point. I wanted to ask you, and thank you very much actually for the very rich discussion, about what the vision of the southern neighbors is when it comes to trade. Because if you look at the existing association agreements, you can see that the results were quite different from country to country. I think, Alia, you mentioned Morocco. Morocco has done fairly well. Algeria fairly unwell, so to say, although they have the biggest, in terms of figures, ad valorem, they have the biggest exchanges with Europe because of the gas exports. But so the point really is you can make a lot out of such an agreement if you have a trade policy, if you have an economic development policy for your own country. Now, on the DCFTA side, we are nowhere. DCFTA in 2011 was offered to 4 countries. 2 said straight away, no, not really. The other ones, as you said, started to talk. First, Morocco. Negotiations are stalled since 2014. Ever since, we don't know what Morocco wants. The negotiations with Tunisia started later, and they were never officially ended, but they don't happen simply for at least 6-7 years now. Again, we don't know, even under the previous president and previous government, what Tunisia wants. When I myself, in my previous function, asked, for example, the Egyptian trade minister, if you don't want to have a DCFTA, what is your idea about developing economic relations with Europe? Silence zero, nothing, not a single, I mean, it was embarrassing. Well, Egypt should know that the European Union is its biggest trade partner. So I would expect a trade minister to have an idea. If it's not a DCFTA, what is it then? The EU came with other ideas, more technical ones. Said, do you want that? And we had lots of talks here internally with DG Trade, for example, said, can we develop something more tailor-made? If something like a Ukraine-style DCFTA is not what the Mediterranean countries want, can we lower our level of ambition? Can we offer something? DG Trade colleagues, of course, were not overly interested, but we put pressure on them. But at the same time, there was never any kind of idea from the South. When there is an idea from the South, it doesn't work. I give you one example, Jordan. You know that the King of Jordan in 2015, I think it was, asked the EU for specific trade concessions for Jordanian companies that employ a significant number of Syrian refugee labor force. We told His Majesty in polite terms, good idea, but we don't think it's going to work. We gave Jordan these concessions. We improved them even further. Jordan has the best market access of any country in the world. But what the Jordanians wanted to see, that is, for example, the Chinese investors would go to Jordan, produce in Jordan for the European market, benefiting from this privileged trade access, did not happen. Why? If you look at Jordanian monetary policy and the price of the currency and so forth, and the pegging of the dinar to the dollar, you know that producing a unit of anything in Jordan is much more costly than producing exactly the same thing in Bulgaria or Romania. So why the heck should a Chinese investor go to Jordan, or a European investor, for example? So what can we do? I mean, it's not for lack of desire that we don't have new agreements and intensified trade relations today, but it is terribly important, terribly difficult to find out what our southern partners really want. Last point, triangulation, very good idea. It's, again, not something that we wouldn't have tried. But if we were sitting here over a glass of beer or so in the evening in a very informal way, I could tell you what the Egyptians told us when we said, well, why don't we sit together with the Saudis and the Emiratis and you and discuss, the 3 or 4 of us, what we can do to help you. This was almost seen as an attack on national sovereignty of Egypt. No, Gulf relations is our thing. You don't mingle in what we are discussing with the Khalijis. we have your bilateral relations with us. So it's a good idea, but in practical terms, it's not really easy to implement good ideas of that kind. Sorry.
Okay, thank you, Michael. Victor?
Hello. I just want to make the same clarification that was done before about the European and Israel agreement. So it is done, saying that I think we were discussing yesterday the geopolitical awakening and the change of narratives and the acquisition of double standard. It's worldwide exploring the economic tools the European Union has at its disposal to exert pressure on Israel to see in the current situation and doing the foresight exercise what may happen into the future, what are the economic options to exert foreign policy. So that's the same clarification that was done before. Thank you.
Okay. And to close this round, I think there was a floor before we move here. The last row. Yeah, there. Yeah, sorry.
Thank you. Very quick question, comment again on the GCC intervention in the region and this behavior of buying land in Egypt, as we've seen recently, the UAE buying for billions and billions of dollars, and more recently Saudi Arabia. So is this the kind of influence, is this, first of all, more politically motivated, and is this the kind of Gulf influence we want in the region? What is behind it? How do we deal with the fact that, yes, the GCC are the most economically stable and they can have a positive impact on the region, but then again, is it a political bargain as well?
Okay. Should we start? Should we make a round? Because I think questions were generally...
I might not address all questions, but there are a few points that are extremely important, I think, raised by colleagues. Three quick remarks. Yeah, sure. Three quick remarks, actually. I think Alia mentioned, and Michael Kohler also, mentioned the fact that what the need for a deep economic dialogue in the southern Mediterranean, these countries and the several countries of the southern Mediterranean neighborhood, and you mentioned, concretely, what the southern partners really want. I think the big problem in these regions, besides, in addition to what you mentioned, the growth, the governance problems, the role of the state, I totally agree, and the financial constraints, I think the big dilemma that many countries are finding themselves in the southern Mediterranean is that there is no growth engine, actually. What is the driver of growth really in this region for Tunisia, for Egypt, etc.? They are really desperately looking for growth engine. I think Morocco is really through sort of multi-positioning, savvy geopolitical positioning, etc., and geoeconomic. Actually, they really achieved the progress. But other countries, they don't have a plan. Actually. What is the plan for Tunisia? What is for Egypt, for many other countries? And these, really serious plans are lacking. And the drama here is that, as I mentioned, whether through trade, investment, or the EU cannot be this external growth engine for these countries. Because trade is marginal, and investments are going elsewhere. So this is also, and for a new and extremely important, eventually, strategic areas like the green economy, greening the economy, the energy transition, etc., the fiscal space is almost inexistent. Tunisia doesn't have money to invest. We are talking about the weakest investment rates for half a century. Since the independence. So that makes actually the idea here. The challenge is what kind of. There is a need for a long-term perspective to push for a long-term partnership. And to find some really a deal for development. I would call this a deal for development, really. These countries are in need for domestic deals. Typically, Tunisia is a need for a domestic deal, but there is a need for a deal between these countries and the partners. And here I would jump in and about this triangulation. Why not? Why overlooking the Sahel? I think that there is a need maybe to broaden even the framework to sort of the EU, the 27, the Sahel countries, because in terms of migration, I think the pressure is coming also from the Sahel, and there is an important pressure, not even on Europe, but also on North African countries, the GCC definitely, and the South Mediterranean countries. And the drama here is that in the South Mediterranean countries, you have sort of actors like the GCC, but like other countries, playing a role and benefiting from a decline also and the absence of this long-term strategy, I mean, for this region. So playing a role of spoilers, of sponsors, etc. So we have non-EU countries jumping in and playing different roles in this region. So probably having a sort of really broader framework or broad framework, including also Sahel, besides the GCC and besides, of course, the South Mediterranean, is important in order actually to think together on not only according to some sort of transactional approach, very short-termist transactional approach, focus on security and migration, but to think maybe on the more long-term actually, or trying to elaborate a more long-term approach.
Well, this idea actually works very well in paper, but as Michael said, I remember like 10 years ago we pushed, some of the 5+5 dialogue countries, namely Spain and I don't know if Italy at that time, pushed for a 5+5+5, including the Sahel. But Morocco was the main opponent to the idea. They don't want to lose the exclusivity of the bilateralism with the EU and sharing it with other sub-Saharan African countries. Might be or might sound a contradiction, but that was the position. Sorry, Gaza.
Right. I will refer to one particular point because, like others were already covered, and this is about the trade relationship with individual countries in the region being like different. Quite obviously, it's not just the economic reality; it's about political appetite among the authorities in individual countries. But I will add one more thing to this. It's not just from the Southern Mediterranean partner country side, but also from the EU side. We say that EU is the main trading partner for all countries in the region, apart from Jordan, for which the Saudis are, and Palestine, for which Israel is. But it's not actually EU, right? It's individual member states. Like when you look at it, it's just a couple of member states that trade with some of the countries. And of course, for Morocco, you will go mostly like with Spain, right? And when you think about Egypt, like you go into like Germany and so on. So it works both ways. And this adds kind of additional layer of complication because for the partner countries, you don't only have like non-trade barriers from the EU side. Then you have another layer from the member country side. So it works both ways, right, this relationship. I could go on, but I won't because Roger will kill me. So.
Alia.
Yeah. I mean, thank you, Michael. Michael's question is the essential one. I agree. I mean, what is the vision of southern neighbors in terms of their trade policy? I mean, to be honest, me as an economist, I've been covering this region for the last 15 to 18 years. I struggle to find like even a policy document that can show me what is trade policy and what their aspiration is. But I can also understand why this vision lacks. And it goes back to what I said earlier, because it's the structure of these economies, right? I mean, like, why do you want to liberalize when the state is dominant and this is the most important, basically, actor in the economy? I mean, even for Egypt, it has even worsened over the last few years. Now, let's see what the future will hold for this. The other reason is also the fact that the private sector, I mean, and we're seeing sometimes what we hear about harassments in Tunisia of private sector by the state does not feel that it can influence the policy frameworks as much as it is. The insistence of many countries on keeping pegged exchange rates, I mean, is a real issue, right? And you put it right. So the loss of competitiveness is partly and principally linked to the exchange rate policy choice that these countries have made, but on the other hand, also about all the other structural non-exchange rate related competitiveness, the job markets, etc. So this brings us back to the macro agenda, macro and structural agenda. And this is why I go back to my suggestion that it is important to deepen the economic dialogue. I mean, like, you cannot try to expect a functioning trade agreement when the fundamentals of what could make your trade policy actually a two-way trade don't exist. And so you need to work with these countries on what are these the reforms that are needed to change the economic structures, so that on the one hand they have better competitiveness, and on the other hand you give voices to a private sector that domestically actually is not being able on its own to find its voice and to find its leverage. So I think this is why I go and say you need to go and lever, the EU working in a smart manner, to lever these other elements of finance and have this strategic dialogue with the GCC on a broader. It's like, what? I mean, you're giving all this money to these countries, but where do you want them to go? Let's talk about it. I mean, like, where do you want them to go? Do you want them to remain dependent on you? I mean, like, is this deal, and maybe I answer the other question on the GCC, it's like, why are we giving so much funding? I think in the case of Egypt, it is because you need to bring back Egypt to stabilization without putting, without basically clearing the central bank balance sheet, which has more than $30 billion or more of liabilities to the GCC, and we still have 10 billion for Saudi, 5 for Qatar, around 4 for Kuwait, and a couple of billion for Libya. Without clearing the central bank balance sheet, there cannot be a credible monetary. No one will trust the EGP anymore, right? So it is a strategic choice, and I think it was the right choice to be done. Whether it has a political agenda or not, possibly, but I don't know about it. But it was critical to avoid a choice. Now, how do we make this an opportunity? That's what I'm trying to say in terms of the dialogue with the GCC. It's like you're putting all this money, but there's so much at stake in this country. So how do we make it work? And we, as Europeans, have actually scrapped the human rights requirements for the MFA, and we're putting 5 billion budget support. So let's work together towards it. And I agree. The Egyptians will try to resist that, but I think also in the sense of this elevated partnership that they have put on the table, and knowing, of course, the Minister of International Cooperation, how savvy it is, I think you need to build on this positive momentum. That's my point.
I think most points were mentioned, but just to maybe compliment on the UAE-Egypt point, clearly a political bargain. But I think what was interesting in recent years, as of around 2 years ago, you'd started hearing in the GCC the idea of, free money is gone, and you heard that at Davos from the Minister of Finance from Saudi. And ever since then, that's all you've heard. There were murmurs in the Khalij that Sisi was caught on a hot mic saying, "Andam al-flus kema ar-roz," they have money like rice. And on the swing side, I won't name the leader, there was a hot mic where we heard, usually when I buy something, I own it. So there is this sort of tension on both sides. And I think what you've seen is prime real estate. You're not going to go wrong with Mediterranean real estate. So it's definitely a returns. This is Sheikh Tahnoun. This is smart money. They will get their money back. How it trickles down, this is a discussion for later. In terms of the $4 trillion worth of sovereign wealth fund wealth we have, that's not even 1%. But if you now start looking at it through a big picture Saudi prism, Saudi needs to balance its budget. Saudi needs around $75, $80 oil barrel. If you look at PIF, its sovereign wealth fund, which it's national developer and global returns maker, it's now gone from 40 billion to 70 billion a year spending, because regardless, no pro-cyclical, we're just going all the way. That takes you up to about $100 to $110. That doesn't include Yemen. It doesn't include Gaza, whatever that looks like. It doesn't include potential carrots for Iran, Pakistan, maybe Lebanon one day, Syria, and you can go on. it looks like there's a lot of money, but there's not a lot of money there actually. When you look at things sort of mid to long term. On the private sector, sorry, on the point on Egypt and sovereignty, etc. Actually, there are a lot of companies who are going under the radar that aren't SOE level, they're that next level down, they're in the M's, not the B's. And those, we've seen them, we've worked with them, and they've invested, and they are investing, and they work with European technology, including in Germany. So there are examples there. Some of them are as far afield as Zambia. Some of them, what they do, which is really interesting, they use political cover because as a sort of canary down the mine, and they know they've got the cover in places like Egypt because they know that there's other goodies coming, so they benefit from the sort of private sector imperative. Last couple of points. If I may step on the chair's toes and just ask everybody here with a show of hands, who actually thinks that like the Maghreb or North Africa is actually going to have a unified position on anything when bargaining with the EU? No? So surely that must mean that there must be a change in the approach in terms of expectations. And if we go back to IR 101, collective bargaining, larger numbers, blah, 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 maybe a bad deal for you is a good deal for you in the long term. And maybe it should be viewed in that sort of way. Last point that I had somewhere was just that social safety nets in at least 2 North African states have become a national security issue in the ministries of interior. They're really a challenge. So I think back to Hamza's point around financing, whether it's remittances, 60 odd billion for the region, or Egyptians in the GCC who are now putting it through the bank rather than through suitcases and trouser pockets. I think these are imperative. But I think imagining what the relationship looks like, we heard Tebboune of Algeria recently speak of a Maghreb Union a la Tunis and Tripoli, and not Rabat. I don't know, maybe there has to be different approaches, and you can have an accumulative approach, points-based system. I really don't know, Champions League, but I'll leave it there.
Okay, thank you for very insightful sports here. So before my colleagues actually kill me, I think there were a couple of hands being raised. So if you are very precise, then I can give you the floor. So you go first, and then, well, the two of you, actually, yes. And then we close it here.
Thank you very much. I'll try to be very precise and very brief. It's not a question, it's a comment, and it's about the supply chains. The supply chains, East-West trade, are under pressure. In the northern one, Russia is under sanctions. Central one is being built through Central Asia. Southern one, Iran, under sanctions. Development road through Iraq is still subject to Iranian control in Hormuz Strait. The Red Sea is an accident can prevent traffic in the Red Sea for weeks. Red Sea plus the Houthi threat. Therefore, there's a pressure, and I think that would benefit the cross-Mediterranean trade and nearshoring in that context. Thank you very much.
Thank you. Thank you very much for the panel. It's a very, very quick question to Adil on the BRICS. You mentioned earlier the Algerians, when they didn't get to the BRICS, it should have been higher on the EU agenda. My question is, we don't only see this in Algeria, also in Tunisia, this trend to go to the east. Do you consider it's politically motivated, economically motivated, or? And the second part of the question, what should be the asset or the priorities for the EU to actually counter this and protect their own interests, economic interests in the region? Thank you.
Okay, who wants to take? Do you take the floor, maybe?
Try. On supply chains, well taken. There's a good book called Backfire that looks at how you can get diminishing returns on sanctioning everybody. But that's a question for across the pond. On BRICS, there was some dirty laundry that got aired, and it seemed like there were frictions between the UAE and Algeria, and that may have played a role vis-à-vis India as a veto. We saw some issues in Libya in terms of who the envoy was, and there are a couple of other examples, including Algeria's role at the Security Council. But in terms of BRICS, if you look at most of the states that trade with the four outside of Brazil and Morocco, which have a deepening relationship, and Russia, of course, on the defense side, 70% odd of Algerian defense imports. With India and China, it's the bulk of trade. For Algeria, there's a sort of prevailing narrative I think you have from Tangiers to Tehran, which is, well, not Tehran, but at least the US allied countries. The US is the external security provider. China is what you could call the national economic security provider, or the surveillance provider, or the informal sector provider. So I think if you look at it in those terms, China is only going to grow in the region. One thing you do see is some volatility in terms of contracts awarded. So around 2016, there were 250,000 Chinese workers on the continent of Africa. 90,000 of them were in Algeria. High rent period, and then it slowed down with COVID. And you've seen loans drop, and you've seen contracts drop as things have started to pick up. And you also see China flirting with Morocco and even engaging in Western Sahara when Algeria has less rent to support. So there's a game there. China yesterday, I think Helene referred to being a mercantilist power, which it is. It will continue to be. Where the EU fits in, we'll see. Hopefully, there are potentially some approaches where they can work together. Many examples from our own work recently, and I think EU needs to stand up for itself and really, because this is going to be an issue more broadly. It's small example. So we had a client who was going to invest in Saudi, UAE, Jordan, and they were considering Egypt. It was in the renewable space, and the materials were to come from the world leader in solar PV, which is a Chinese company beginning with something. And there was a single source op-ed on the Hill in the US that suggested that some of this supply chain had gone through Xinjiang. It was completely malicious. It was unfounded. I personally went to see one of the Japanese conglomerates in the GCC who had conducted factory-level due diligence. There was nothing of the sort. This was a very clean company, no pun intended. And what transpired was the investor, who was going to invest in 4 US allies, have taxes repatriated to the US, create jobs locally, work with EU companies as well. They didn't go ahead. Why? Because of a transaction cost based on a treasury issue. And I think you're going to see more and more of this. So I think this is something I'd like to bring up on the supply chain, which I think is going to be, and ties in supply chain and BRICS, on where the EU sits vis-a-vis North Africa, and how sort of the great power rivalry is going to create more friction, strains, and costs, and possibly deterrence to investment and job creation.
I just want to actually just echo what you said, the importance of cross-Mediterranean trade, and going back to this idea of like trying to understand why countries are so not basically engaging or on the DCFTA. It is partly also because one problem of the association agreement, it has created this hub and spoke effect, right? Because there were these bilateral north-south trade, and despite the effort of bringing the South-South framework, whether the Agadir agreement or other, those have not gone too far, right? I mean, and the logic of these basically cross-Mediterranean, I mean, even South Mediterranean free trade areas or facilitation has not gone very long. So as we think about the future, we really also, as part of this element of triangulation, but even more important to make the DCFTA even more attractive, there has to be a very positive and serious agenda from the countries of the South primarily, but with support from the EU in terms of technical know-how, etc., to further the South-South integration. Now, of course, we will hit the geopolitical roadblocks that we all know that are not easy, but but I think we cannot dismiss this idea that, okay, why are they refusing the DCFTAs? Because this notion that the AA did not deliver on, did not help also bring this South-South integration rests at least in the mind of civil society and private sector, not necessarily without politicians who have been also responsible for not deepening this cooperation.
Well, thank you very much. I think we come to an end, and as you were mentioning the policy agenda, I would like to mention that the OECD is already working on the second regional report on integration, regional integration. They published one 4 years ago, and now, per request of the ministers of foreign affairs, they are already working on the second one, which should be released by the end of the year. Of course, we will not see much progress in that report, as you can imagine, from the previous one. But the OECD has this ability to frame ideas in a positive manner. So when you read this report, because they list a number of policy recommendations and areas where you see that we can actually move towards, you get a kind of positive sense, which was at the end of the day the ultimate goal of this session. I think that there is a lot of room, of course, to bring economic issues into our EuroMeSCo network, as has happened during the last 4 years of the project. And I'm sure that in the coming years we will bring more and more issues, because at the end of the day, what we discussed yesterday and what we have been discussing today is totally intertwined, interconnected. And I would like to finish by thanking wholeheartedly our dear speakers, Hamza, Kazia, Alia, and Adele, and I would ask you for a general applause because they did it very well. So thank you very much. And
next year is the 30 year of the Barcelona process.
Next year is the 30 years of the Barcelona process, and this year also the non-Maghreb 1994. So there are lots of celebrations, but in the run-up to the celebrations, we have our coffee now, and we'll be back in 15 minutes, if I'm